My base case at the moment is for an extended hold.
Marta, some people are describing today's Fed meeting as historic now that Kevin Warsh has won the Senate confirmation to succeed Powell as chair, and he could be in that role as early as May. Why is this transition to a new Fed chair such a big moment?
Well, it comes after the Department of Justice opened criminal investigations, including investigations regarding the Fed's renovations of its DC buildings. Powell has said he won't leave the committee until those investigations are closed with finality. The Department of Justice has since dropped the building investigation, but has said it would reopen as necessary. And as all of this is unfolding, some have worried that if Powell doesn't leave the committee, it could make it difficult for Kevin Walsh to have the rightful influence, particularly given some of the changes he would like to make. He would like to revisit, for example, how the Fed estimates inflation, its cadence, style of communication, and potentially shrink the Fed's balance sheet, which has grown exponentially in the years since the global financial crisis.
Did Powell address that transition directly in his press conference today?
He did. He said he would not challenge Warsh's chair. He would support him, but
Okay.
he would remain on the committee for an indefinite period of time. He did explicitly say he won't be a shadow chair. Regarding Warsh's potential reforms, he was actually broadly supportive. For example, he said it's a healthy thing for Warsh to revisit the style and cadence of Fed communication.
Yeah, really interesting. So for now, there's still some uncertainty around what the committee ultimately looks like. But I want to bring it back to the market, Marta. What does all of this mean for the path of interest rates, do you think?
Okay, so the path of rates is especially in question right now, regardless of who's in chair. We're dealing with tariffs, an oil price shock, and of course, the AI revolution, and all of them have an inflation impact. For now, the Fed is on hold. That's what it decided in this meeting. It didn't reduce or raise rates, but we did see four dissents, three of which argued against the language of easing bias in the Fed statement that accompanied the decision. We're watching to see, the Fed is watching to see as well, the impact of higher oil prices, particularly as it relates to core inflation, whether there will be any lingering tariff impact on prices, and the impact of all the AI spending in areas like memory chips. And don't forget, the Fed still has a dual mandate, so it needs to keep an eye on the labor market. Longer term, if we're thinking about a Warsh era, it still remains to be seen how rates progress from here.
What a shift recently. The market had expected quite a few rate cuts in 2026. But from what I remember, Marta, you were never fully convinced that the Fed would meet those expectations. Now, some commentators are even talking about the possibility of a rate hike because of some of the pressures that you just mentioned. So
Right.
I want to put you on the spot if I can. What's your expectation now?
Well, my view is especially contingent on oil prices, since
Okay.
historical data suggests that a spike like the one we are seeing can create a short term move higher in inflation. And at the moment, because we don't know how long the Strait of Hormuz will remain closed, we don't know how long the oil price shock will remain in place. My base case at the moment is for an extended hold, with the Fed potentially cutting rates once more when the price spike is behind us.
Really helpful perspective as always, Marta. Thank you so much. Great to see you.
Good to see you.